Good morning, everyone. Rob Lukey with Our Capital Group in Prop Realty. I wanted to take a second to go over the Case-Shiller Index, number one, but I also wanted to talk to you about a chart that might be showing something a little different than what we're currently seeing in the Case-Shiller Index. As you know, Shop Prop Realty, what we do is we try to change the way the people buy and sell real estate by putting more money back in our clients' pockets. We've now given back over $3.3 million back to buyers and sellers that normally would have went into a full commission agent's pocket. Our capital group, what we do there is everybody knows we're an investment company where we buy and sell real estate for ourselves and our partners. If you want to see our past performance, you can always click on past performance. And then if you have an account, you can log in, see your details on properties you own, search for properties. And these are properties that aren't listed in the MLS, obviously. But getting to the Case-Shiller Index in that chart I was talking to you about is that the S&P Case-Shiller was out. We saw basically twice the rate of inflation. So we're back down. And if you go back and you look at the Case-Shiller indexes, we were saying that we were going to see it back and see year-over-year price increases down into the low single digits. That's where we are now, which at about 4.2, 4.5%. This is the 10 and 20 city-day composites. As you can see, where we were increasing at a 16 to 15% rate back in the peaks. Year over year, we got up into 2013, late 2012, up in the 12% year over year. Obviously, that's not a sustainable trend. So we've drifted back down. Markets weakened a little bit, but now I wanted to talk to you about a little bit about this. As you can see, the Case-Shiller says the housing recovery is faltering while prices and sales of existing homes are close to normal. Construction and new home sales remain weak before the current business cycle. Now, to give you an idea, anytime housing starts, we're at their current levels, right? 1 million at annual rates. The economy was in a recession. Obviously, we're not in a recession at this point, and the question really becomes is this a lagging or a leading indicator? Obviously, housing is generally a lagging indicator. So I wanted to talk to you a little bit about because we've seen some weakening, for example, in in the Seattle market here with 0.4%, and the year-over-year change still 6.6%, but a little bit of softening. Obviously, we saw from that other chart increasing at a 12% rate down to about a 4 to 5% rate. And so the question is, again, are we going to continue to see that? Here's one of the charts that I wanted to talk to you about that I think is pretty interesting. This is home ownership rate, which has dropped to a 20-year low. So if you look at this market right here, this is basically the peak for home ownership, okay? And now the peak of the market as far as pricing goes was about right here. Generally seeing the pricing start to fall off, home ownership starting to fall off, and then obviously that was the peak price of the market. But I wanted to point this move out to you here, which this was the lowest that we've seen it in the last 20 years. The last time it was at this range was 1994. And what I wanted to tell you that what's interesting about that is that right here, this is 1994's movement where we were basically flatlined remember, as we came out of the first Iraq war, and we saw actually we had some banking crisis in here with the savings and loan. For those of you that are old enough to remember that, we had saving and loans crisis here. But again, so what we saw with the market was weakening, but this is the interesting thing. As that home ownership was at a 20-year or one of the lowest since it has been, we obviously saw this move up. The question is that are we going to continue to see that this type of move? Probably not, but we probably will start to see home ownership start to spike back up. Here we are. You would expect this to come back and at least get some type of retracement, which could mean that we're going to see this where we're going to finally break through those highs back that we saw as far as the home price indexes maybe over the next couple years. Anyhow, I hope that helps. Have a great day.